This week saw very rapid changes in the stock market. Price falls accelerated, and yesterday, on Thursday, there was rather precipitous fall in prices. Both indexes fell. Turnover, of course, was not as high, fortunately, because higher the turnover would mean greater the damage done to the market. So there is still resistance by sellers and buyers, and unless something dramatic happens again, the market should stabilize. It is the expectation of brokers that having broken the resistance level at 6,000, the all-share index should stabilize at about 5,500. The problem is the debt hangover. These debts have to be cleared either by liquidating the stocks if the clients are not willing to pay, or somebody has to take over these debts, as happened in the financial crisis in other countries. So until this debt hangover is cleared, it is difficult for the market to recover, and the longer that it lasts, more difficult it will become. All this is the result of markets having risen too much when price earnings ratio went up to 25. Now it is down to 15.1 today. But still many people think that it is too high and that it should come down to about 10. But given the fact that our companies are doing quite well, it is possible that the stabilization should take place between 10 and 15. The earnings records of many companies is good, except for the tree plantations, which in the third quarter showed some serious weakness. Although the top line was secured, the bottom lines ended in the red. Many tea companies like Balanguda, Taravakale, Apugastan, Malvatta all showed losses. Only the companies which have rubber plantations managed to show profit. So this situation certainly required a devaluation, and the government was right to devalue the rupee instead of holding it rigidly when there was inflation of 14% in the last 2 years. Wages of the tea sector had risen by 27%. So there was no way in which the tea companies could compete globally unless there was a devaluation. The prices of tea in foreign currency have been stagnant. Tea markets have also been far from rosy owing to the troubles in the Middle East. So except for the tea sector, the rest of the companies are doing quite well. But of course the investment trusts, as you know, the investment trusts are those who hold shares in the market, and the high price shares which they bought and which they hold will suffer losses, and these investment trust prices should fall. So the diversified sector, the investment trusts are sectors which are likely to fall, but the other industry, manufacturing, banking, should see no such prospect, and they should stabilize very soon.
How about the budget impact to the stock market, especially about the rupee devaluation?
The rupee devaluation, as I said, is very necessary for the tea plantation, very necessary for the tourism, because as a friend of mine told me the other day, the cost of a breakfast in Waldorf Astoria Hotel in New York is similar to the cost in Sri Lanka. Now, unless the costs are reduced, and there is no way to reduce costs once they go up. So depreciation will be very useful for the tourist sector as well. Similarly, for the import substitution industry, we have to produce a lot more goods locally. And to do that, if we have to hold the rupee at a overvalued price, the local industries cannot develop. So I think it was the right move by the government to depreciate the rupee and probably let it float because the central bank and the government authorities have failed to control inflation. When you don't control inflation, since the exchange rate is determined by the relative purchasing parity of the two currencies, it cannot be held unchanged. And so with inflation of 7%, 7.1% last year and 7% this year, means that prices have gone up by over 14%. How can you recover such? How can you become competitive in this situation? So the devaluation is necessary. But there are many other things are required, but devaluation itself will not solve the problem. One has to reduce the budget deficit, and this is something the government are unable to do. Not this government, every government since independence has been spending far more than can get from their taxation, and there is a limit to taxation. My own suggestion is that with regard to free education and free health, these are services that we cannot afford. If we have to do that, then we have to tax the people, separate and earmark separate taxes, one to finance health, one to finance education. Then if people want better education, then the prices of those goods will have to go up and indirect taxation will have to match that. Without such a radical reform, there is no way in which the budget deficit can be brought down. And unless you bring down the budget deficit, devaluation by itself will not help. So this is the view that I have. And unfortunately, people seem to think that this exchange rate is determined by capital flows. That's not so. Capital flows are determined by interest rates and the earnings prospects of the country that you invest in, the returns. So the exchange rate is determined by the relative purchasing parity, and normally all international institutions are worried about these capital flows. Capital flows means that we are really borrowing from abroad. Either the people are investing in the local bond market because of the higher returns that they get here, or they are investing in the stock market. Of course, if they invest in setting up factories, direct investment, it's okay, but still we are selling our assets. So either we are borrowing against our assets or borrowing by issuing financial assets. So both are borrowings. So we cannot live on borrowing forever, as other countries are realizing, and the world global situation being such, we have to develop our own export earnings, not only to pay for import but also to repay the debt and to repay the interest. It is a fallacious argument to say that because we are expecting some foreign capital inflows to come by the end of this year, we have enough foreign resources, so there is no need to depreciate. That's a very strong argument because it has nothing to do with the fundamental factors that determine exchange rates.